What's going on, everyone? It is Paul, the 920 Trader with 920 Trading, and today we're going to be talking about something that's very important. Last week we talked about the ever elusive 100% play. That when you put on a play and it works 100% of the time, which there is no possible way in the world that is ever in your wildest dreams going to happen. But the question, it kind of begs the question, does that mean that every trade, therefore, is not worth money? No, it doesn't mean that, because by the end of this video, I think I will have make you a true believer that every time you push the button can be worth money. So what am I talking about? Well, very simply, I'm talking about expected value. What's expected value? Expected value is basically, every time you push the button, there's an expectation that is worth something. Now, again, every trade isn't going to be worth. You're not going to make money on every trade, but here's the illustration on it. So let's just say, for purposes of discussion, you have a 50% win rate, and every time you have a winning trade that is worth $100. Every time you have a losing trade, because those are 50-50, so you win 50%, you lose 50%. So every time you win, it is worth $100. Every time you lose, it is you lose $50. So that begs the question: what is every single trade worth? Because it is. What is the expected value every time you push the button? But before we get to that answer and tabulate that answer in your head, because it's coming up here real soon, the reason why we look at expected value is because we want to know, as a trader, that we have a good edge, and we have to be able to trust our specific edge. What is your edge? What is your edge? What are your probabilities telling you to do? Okay, again, 50% of the time you're going to have a winning trade, 50% of the time you're going to have a losing trade. You win $100, you make $100 every time on a winning trade, and you lose 50 every time on a losing trade. So what does that tell you? What's your expected value? Tick, tick, tick. Your expected value every time you put on a trade is $25. Every single time you put on a trade that is worth $25 in your head. And I know what you're thinking right now. You're thinking, well, if I make $100, why don't I stop? Or if I make $200, or if I have 3 trades in a row, I make $300, why don't I stop? Okay, well, maybe the next 10 trades in a row, you're going to lose $50 on those trades. So again, we don't look at it on a trade-by-trade basis, but rather a series of trades over time. The more trades that you have, the tighter you can get. So from a standpoint of expected value, you know what that expected value is over 100, 500, 1,000, and it just keeps, it tightens up every time. So why is it important to know your expected value? Specifically for the different tactics that you play. So let's say that you have 4 tactics in your overall strategy. Well, tactic A has expected value of $60 per trade. Tactic B, it's 55. Tactic C, it's $30. And tactic D, or the fourth one, let's say it's only $15. So, but you realize that all of those are expected values. So essentially, you understand that over time, that specific setup is worth this many dollars from an expected value standpoint. And again, folks, you don't know which trades are going to be winners and which trades are going to be losers. You never know. When you put on the trade, you absolutely, positively, you never know which ones are going to be winners and which ones are going to be losers. So you can't just say at the end of, well, I just made $100 or $200 or $300, I'm done, because at that point, you are just only worried about the results and not about the process. If your process has you winning $25 every time you push the button, will you ever stop pushing the button? I submit to you that you will not ever. When your edge presents itself, you'll never stop pushing the button. Now, I talk about this with a group on a regular basis. This is basically the theory of the magic coin. Let's say I gave you a coin, and let's say it's a quarter, but it's a magic quarter. You know, your normal quarter, every time you flip that, or for 100 flips, roughly you're going to get probably 50 heads and 50 tails, but not this magic quarter. This magic quarter, so for every 10 times you flip this specific this quarter, 7 are going to be heads and 3 are going to be tails. Okay, great. So 70% of the time it's heads, 30% of the time it's tails. Every time you flip a head, that is $1 that I'm going to give you. Every time you flip a tail, you're going to give me $1. So at the end of 10 trades, what does that come up to? What is the expected value every single time you flip the coin? It's not $1. You know, remember, because you have your winners, and then you have to also consider the losers. So you're out of 10 trades, you put $7 in your pocket, but you had to take out $3 to pay me because those were tails. So for every 10 flips of that magic coin, you are keeping in your pocket $4. So the expected value every single time you flip that coin is 40 cents. So here is my question. Here's my question to you. Would you ever in your life, would you ever stop flipping that coin? I mean, the coin is your edge, folks. The coin is your edge, and that's what we're talking about when we're talking about expected value. That is the expected value. It is 40 cents every time you flip that magic coin. Now, what your expected value is every time you push the coin, it's not going to be the same as mine, and it's probably not going to be the same as, well, really, it's never going to be the same as anybody else. But the only way that you will truly know what your expected value is, number one, have that written trading plan that is very, very, very specific about when you're supposed to put on a trade. And it has to be specific. It can't be general. It says basically, under these certain market conditions, I'm putting on a trade. And then under these certain market conditions, I'm taking the trade off the table. And only you can define what those certain market conditions are. We talked about it in a video here a couple of months ago about the four powerful setups with the overall 920 trading strategy. Guess what? Guess what the number one expected value is? The number one play for expected value. It is not the fishtail, it's not the aggressive play, and it's not the conservative play. It is, in fact, the double cross. The double cross has the highest expected value of any tactic within the overall 920 crossover strategy. It is my go-to. It's my go-to, folks. It's absolutely, it's wonderful. It's got a really, really high expected value to the upside. To the downside, the expected value is actually higher because generally speaking, we move quicker back to the downside. So that's it right there, folks. It's all about the expected value. When you truly understand what the expected value is, and you can't do this overnight, you have to do it through back testing and real live testing. Your back testing is going to tell you one thing, but when you start putting on those live trades, it should be pretty close to, if you're following the trading plan, it should be pretty close to what you see in your back testing and maybe some simulated trading. So again, folks, it's all about the expected value. That will give you the confidence to say, hey, you know what? My edge is right here. My edge is presenting itself right now. So based on my specific written plan, I have to put it on. I am compelled to put on the trade. That's your edge, folks. When your edge presents itself, you are compelled to put on the trade. Why would you want to do anything else? If the market is saying it's time for you, based on your rules, to get into that trade, why would you not want to get into that trade? Again, if you truly have an edge and you truly understand and you trust your edge, you must trust yourself to trust your trading plan. It's that simple, folks. Trading is difficult, but it's very, very straightforward. There are a lot of moving parts, a lot of variables, but it's very straightforward. Did your edge present itself, yes or no? It's easy. If it presented itself, you put the trade on. If it didn't, you leave it alone. If something that looks like your edge presents itself, but it's not really your edge, you leave it alone. If the trade takes off without you, you leave it alone. We're not going to FOMO into trades ever, ever, ever. We've all done it. That's why we know to not do it. But again, folks, it's all about expected value. If you truly trust your written trading plan, you will understand what your expected value is, and then you'll push the button just because your edge is there. And at that point, you don't care about the wins and care about the losses. You never know when you're going to have a winning trade. You never know when you're going to have a losing trade. You can have every single light in town turn green. You leave your front driveway, meaning everything is pointing back to a really, really good setup for a trade. Everything is there. All the lights are green. You press the button, you could still find yourself in a losing trade. It happened to me a few days ago. I mean, everything. It was a really, really nice run to the downside, a nice pullback, a double cross to the downside at a major, major level. I pushed the button. A minute later, I was out of the trade. Losing trade. I mean, that's just the reality. But it was the setup. The setup was there all day long. I would take that trade 100 times out of 100. Now, what keeps a trader from being down on themselves? It's their expected value, folks. It's number one, their plan. Number two, following their plan. Number three, understanding that expected value over time. If it's a good, positive expected value, you will do very, very well. Guys, this is not easy. It's not easy, but you can do it. You absolutely can do this. But hey, that's expected value, folks. It's just, what do you expect to make? You know, not on a single trade, but over time. What does that look like? Again, folks. Now, I appreciate you guys for watching the video. Appreciate you guys very, very much. So if you do like the video, you know what to do. Like, subscribe, and turn on your notifications. That way you can be notified when we drop new content. And leave us a comment. I respond to every single one of those comments. So leave us a comment. I would greatly appreciate it. Also, don't forget to share. Share with your friends, neighbors, trading community, anybody you think that could benefit from these videos right here, folks. Feel free to share. Now, if you're interested in live daily trading, where we go over these setups all day long, every single day, folks. It's live trading right now. I mean, the market is open right this second. It wasn't doing a whole lot for a little while, so I decided to make the video. If you're interested in that live daily trading, because again, folks, this is where the rubber meets the road. Head on over to our live trading Discord. It is called 920 Trading. What else would it be called? It's called 920 Trading. The link for that is down below. So we are so convinced that you'll find value in what we do, and we will make you a better trader. We're so convinced of that. We will give you that first week for free, no cost to you. Be a full member of the community with all of the resources that are available to our full-time members. You have access to that 100% for an entire week. What do you have to lose? Really, nothing. You don't have anything to lose. A little bit of your time, but I mean, what else are you going to be doing? Are you trading solo without any help, without any backup? Okay, great. Hey, whatever. Anyway, go check it out, folks. Again, 920 Trading. It's the link for that is down below. Now, if you just want the trading plan, if you want the 920 crossover strategy, guess what? I am giving that to you. Okay, it's at 920trading.com. The entire strategy is there for the world to see. That's it. You don't need to spend thousands of dollars on a, quite frankly, a super secret strategy that's probably been around for quite a long time. And people are charging thousands of dollars because they put a brand new name on it, or a fancy bow. They shine it up just a little bit, folks. 920trading.com. Between that and the YouTube videos, everything that's out there on YouTube, but anybody's YouTube videos and mine, I don't hold anything back from a process standpoint, folks. It's all there for the entire world to see at no cost to you. But again, folks, 920trading.com. When you are there, sign up for our free newsletter that comes out every Saturday morning at 11 o'clock. Anyway, that is the video for the day, folks. Expected value. That's it, guys. I mean, expected value, it's the magic coin. I'm giving you a magic coin. Your magic coin is in the market, folks. Flip it. 40 cents every time you flip that coin. What is your expected value every time you push the button? If you don't know what you got homework this weekend. That's your homework. Anyway, I hope everybody has a really, really great weekend. I hope everybody had a good week. I hope everybody followed their rules. But anyway, folks, thanks for spending a little bit of time with us. I hope you guys have a great rest of the time, and you guys know the rest. Until next time, I will see you guys later. Oh, and I'll see you in the markets. See you.